Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by Washington research analyst and managing director Courtney Gelman. Courtney, how are you doing today?
I'm well. How are you?
Doing really good, thanks. Obviously, a lot going on in the policy world. We'll start with the big story over the last couple of weeks, probably the big story for the year so far, which is the Supreme Court decision to rule the use of IEPA to levy tariffs illegal, and the administration's pivot point from that. So, a lot of things changing kind of under our feet and could still change, but I want to get your high level takeaway from the decision, and then maybe a couple of winners and losers from the change that we'll see this year.
Yeah, so a few takeaways that we see as important. As you mentioned, court ruled that IEPA cannot be used to impose tariffs, but the administration has a number of other tariff authorities they will use to replace those tariffs. What they're currently using is Section 122, which they imposed at a 10% rate currently as of recording time. And they're going to use that as a bridge to then impose Section 301 tariffs at higher rates on certain countries. But when we think about this, Section 122, again, it only allows 10% rates. So that's lower for a number of countries than the rates that they were facing under IEPA. They can only use Section 122 for 5 months, but we see this as generally a $60 billion cut in tariffs that we had expected otherwise under IEPA. So there's a fiscal stimulus measure to this, which is important because one of our big themes this year has been shock and awe fiscal stimulus, and this supports that. And then you also have those countries that are now going to face lower rates. So companies tied to those supply chains will benefit. So when we're thinking about India, China, Vietnam, Bangladesh, Thailand, Southeast Asia generally. Any companies that are tied to their supply chains is going to see a reduction in their tariffs from here. And we've seen stocks leverage that outperform, certainly on Friday when we saw the initial ruling come out.
Yeah, that's a great point. Another point that you all have made, is that despite some of the posturing and occasionally tense dialogue, that Mexico and Canada remain kind of beneficiaries from the broader tariff regime under this administration. I wondered if that's still the case as we go forward with these different authorities and the way the administration is looking at things in 2026.
Absolutely. So under Section 122, USMCA compliant goods are still exempt. So we do continue to see China and Mexico as the biggest winners here. We do have to renew our USMCA deal by July with Canada and Mexico, and we probably will see some tense dialogue, some headlines on that. Certainly, the administration is starting to posture more towards bilateral deals, talking about a bilateral deal with Mexico, particularly after Canada made the trade deal with China and Carney's speech at Davos. So there's going to be some rough headlines, but we do still see them as the largest beneficiaries because USMCA goods remain exempt from the tariffs.
Yeah, and that fits in, more broadly with the themes of deglobalization that you all have spent a lot of time talking about, nearshoring, reshoring supply chains. So fits very much in that bucket. I want to pivot to the State of the Union, which was this week. I don't know that there was a ton of actionable items for investors, but obviously a lot was said. What were your main takeaways as far as things that can actually be implemented, policies to keep an eye on, or things that are more tilted towards, revving up the base in a midterm year?
Yeah, so I think when thinking about the State of the Union, this was certainly this is a midterm year. The president has a low approval rating. He's trying to rev up his base. And I think a lot of what we saw on Tuesday night was the president trying to make this a comparison of his party's policies versus the Democratic policies. So rather than a referendum on him and his low approval rating, making a choice on specific issues for voters, because on issues polling, Republicans do outperform Democrats on a number of issues related to the economy, related to border security. So I think that was really the focus for the president. There weren't many policy prescriptions proposed, but we did see some notable things. Housing, talking about the ban for institutional investors. We don't see that as extremely likely, given that the House passed its own bipartisan housing bill without including that measure a couple of weeks ago. That's something that we're keeping an eye on. Potentially the most interesting to us was the AI announcement, where tech companies are going to, and data center companies are going to pay their share of electricity to not increase costs on consumers. So that's something that we're certainly watching. We need to see the details to see whether or not that's a policy that can really stick, and what these companies are actually agreeing towards. But in a midterm year that's very focused on affordability and consumers facing increasing costs, this is something that the administration has been focused on.
Yeah, absolutely. And that's a great point because there's also kind of this growing wave of pushback against AI more generally. Data centers, in local communities has been a hot button issue. So we'll keep an eye on that. I think that would be really interesting and obviously have big implications for utility companies and some of the power players who have been big winners over the last year.
Yeah, absolutely.
Courtney, this has been really insightful, really great use of time. I appreciate it as always, and we'll look forward to talking to you again soon.
Thank you.